What's up, guys? How y'all doing? Thought I'd start a little earlier today as I have to go out in a couple of hours, so bit of a different schedule today. What's up, Philip? What's up, Frank? How you going? Alright, well, I might just dive straight into it. Let's let a couple more people filter in first, and then I'll kick it off. But, Ernesto, what's happening, dude? What? Matic. Alright. Let's check out the S&P 500 to begin with. So this is the weekly chart for the S&P 500. If you have a look, you can see it's been in a falling wedge. The very critical moment, the very critical tests have been these. If we go to the daily and just zoom out a little, just to get a bit more resolution on the candles, you can see test 5 was actually, it broke out of this trend. It didn't survive very long though, and came straight back down again. Now, at the moment, there was a 6th test that got rejected, but now we've come up for another attempt, and this time we seem to be breaking it for a second time. So I guess the big question is it going to be a repeat of test 5, or is test 7 going to be the one that sticks, you know? That's pretty much the big question at the moment. Now, the highs that I'm like kind of paying attention to are these highs here. So we had a high right there. This is 410 on the SPY. So 4100 on the, if you call it the S&P 500, as it goes in the thousands, not the hundreds. But anyway, 410 on the SPY is this level of resistance that's had 3 critical touches, probably 4 if you class this one as a touch. And that, look, there's examples of it being support back here, a little bit of activity off it in this level here. But otherwise, it is a level of uncharted territory. Like, the S&P 500 has never been up that high before. Not since 2021, you know? This is a new area for the S&P 500, totally new. So this level, 410, is going to be very critical, and you know, I don't want to sort of make a prediction on it, but you know, that there's a fair chance that it gets bounced off that and we come back down to look for support. However, that doesn't mean we can't break out of it as well. So we'll just have to wait and see. Now, as we all know, if I go down to the 1 hour chart, just to get even more resolution on what's happening, and I zoom out a touch, you can see what we've got on the horizon, and that is the federal funds rate. So we find out what the interest rates are going to be put to. Now the forecast, I think we have a forecast already. Let me check that. Yes, Fed funds rate 4.75, so that would be a 25 basis point hike. Now, in the last few funds rate decisions, let me just grab a notepad here. We've got, okay, so this is where it started getting painful. March of 2022, they raised the funds rate by 50 basis points. So that's 0.5% interest rate. Taking us to, so let me just put in March 22. Now, how often do they put out a funds rate? It's like, it's not every month. So there was no one in April, but there was one in May of 22. There was one in June of 22. There was one in July of 22. There was one in September, November, and the most recent one was the December, which happened sort of just before Christmas. We got a rate decision, which was a plus 0.5%, so 50 basis points. Effectively putting the interest rate at, who knows what it is right now, 4.5%. So let me put in equals a 4.5% interest rate. So a plus 0.5% interest rate. Well, let's work backwards. Okay, so what was November? That took us to I believe that was a 50 basis point hike, was it? Previous to actual. No, that was a 75 basis point hike. So very nasty one. And that took us to an interest rate of 4%. Now the September hike was, I believe, second. Let me just now this technically will be Feb 2023, the next one coming up. I'll put a gap there, and then it's kind of like unknown what we're gonna get, but the consensus out there, like the sort of forecast is a 25 basis point hike, which we haven't had it down a 25 basis point hike for some time, but that would take us to 4.75% total interest rate. All right, September was I'm pretty sure a 0.75. Let me just check that. March. We go 0.5% interest rate back here. So that was nice. It was like only just beginning in March of last year. May, they kicked it up 50 basis points. Sort of going against my word here. I'm going the other way now. it makes more sense, I guess, to climb rather than to fall. So that put us to a 1% interest rate. And then we had in June, we ended up at 1.75. So that was a hike of 75 basis points. 0.75% equals 1.75. So that was a pretty heavy jump. That was pretty monumental, right? Now July, we're at 2.5 total, so that's another 75% hike. Sorry, it's 75 basis point hike, 0.75% hike. So taking us to a grand total of, was it 2.5? Yeah, 2.5% in July in total interest rate. Now the September, we ended up at 3.25, which is another 75% basis point hike, setting the interest rate to 3.25%. Okay, so you can see here, these are our stats. Now, if we were to get a 50 basis point hike here, it would be pretty unexpected because the forecast is for 4.75% as the final interest rate for this release. Now, a 50 obviously would take us to 5% total. But I don't think they're planning to do that. I think we're going to get the 25, but we're going to stay open to the fact that we don't know, of course, and it could go up by 0.5%, not quarter. But look, I think the market, as we've got the forecast, you can see the forecast to actual is generally speaking on target. They've only miscalculated it once where it came in heavier than expected. They're expecting a 50-point hike, but they got a 75-point hike. So, yeah, that's... So look, this is the thing to pay attention to. Let me get all this lined up so it's easy to see down the line. Is that in line? Oh, it's probably pretty hard to get it perfectly in line. But anyway, so 50, 50, 75, 75, 75, 75. So over the course of those 4 in a row of 75 basis point hikes, that caused significant tightening to the economy, to the US economy, and probably, you know, inadvertently to the globe, right? So December, this was a sign that they were softening a little on the hikes. Still aggressive, still a 50 basis point hike. You know, we're at 4.5% interest rate in the US. So this is going to be interesting. Like, let's keep an eye on that. Whoops, just lost all my screens. 1 second. All right, we're back. All right, so let's get back into the market. Let's have a look at the point in time. And I think the reason Bitcoin's hanging at this level here is because it's perhaps waiting to see on the events. You know, we're waiting for the federal funds rate. Let me change this to white so we can see it. It's a bit dark. As being red. Okay. We'll say Fed funds rate. That's fine. Okay. So we're still a fair ways out. It's less than a week though. It's next Wednesday. So currently we are Friday in Australia. Let me just go by US time frame. So for me, it's a Tuesday that this happens on, I believe. Yeah, funds rate. Wait a minute. No, a Thursday, Feb 2. Thursday, Feb 2. So yeah, we're a week away. Less than about 6 days. Cool. And for me, it's 5 a.m., so I'm going to have to wake up really early on Thursday. I'm just quickly going to check my work schedule and see if I'm working that day. It'd be nice if I wasn't, because then I could focus on the market. But we'll see in a second. Let me get my roster. So I'm working today. No, I'm not working on the 2nd. Cool. I'll be here. Maybe I'll stream the funds rate decision, which is over here. Oh, super chat. What's up? Thanks, Eddie. Appreciate that. Analysis on arc block, Elliott wave, and how to draw fib. Okay, yeah, I'll have a look at that. Arc block, is that a crypto or is that a stock? Just let me know and I'll be able to find it. Arc block. I've never heard of arc block. Remember yesterday we were looking at the events, CPI, PPI, funds rate. Oh, I actually broke the formatting, didn't I? Maybe I should go back to the way it was. There we go. All right. Funds rates in red. Crypto, ABT. Okay, no worries. I'll have a look. Let me grab a new window. Go to my Bybit list. Hopefully it's in here. AB. Oh, it's not in my ABT. Okay, I'll add it into my my Binance list. Is it new? I've never heard of it, ABT. Or is it a KuCoin thing? ABT. Oh, ABT. Arc block, okay. It's on Coinbase. That's weird that it's only on Coinbase and nothing else. Alright, let's open the Coinbase chart. Arc block against USD. It's on OKX and BitCub. Never heard of BitCub, but that's cool. Alright, let's open it up. Let's have a look. I'm going to start high time frame. So let's go daily. And I'm just going to hit refresh. Alright, so it looks like it's only been on the scene for like, what, 6 months? Not terribly long. 189 days. Just let me go to the monthly chart. 1, 2, 3, 4, 5, 6. This is the 7th month that it's been on Coinbase. Okay. Daily. Wow. So today's candle was epic. So there's not a whole bunch of price history on this, to be honest. Like, keep your eye on the high, which is up here. You just want to like try and like identify where the pivots are. Like, where is the previous support resistance level? This whole thing was in support discovery. Like, I was trying to figure out where the support lives. You've got a key level here. So I'm going to mark that out. Well, technically it's down here because of the wick. But yeah, roughly the same thing, right? So support in blue, resistance in yellow. And just, yeah, keep your eye on the wicks. Like, there was a wick here, wick here, wick here. These are like pumps. And what you want to do is like not expect price to move beyond the previous wick until you get evidence that it is going to hold. So like, look, can you see that this was the recent high that we dealt with for this coin? And then we're going to do another one here. So I'm just picking out, this is the best we can do with this because there's not a lot of price history, but, and there is another one up here too, pretty obvious one here. And it sort of matches this one back here too, that same level. So I'm kind of going to class that as the same level, I would say. So just to be a bit more on the conservative side, I would say it's this. And that was a swing failure pattern. Now this, what we recently pulled in, see these are our levels of resistance as it stands here. There is another one down here, like where, and you can see there's a series of highs along the same kind of range, just around here-ish. But I'm not going to mark that one because we're beyond that for now. All right, let's go down the time frames. Now that we've established the bigger picture, obviously the oscillators are going to be elevated because of today's performance. That's a given, right? You don't even really need to look at the oscillators. You would know that they're hot. So 4-hour chart, can't really see a whole degree of context on this time frame. So we're going to have to go down 1 minute. Let's go down to the 15. So this, to me, this looks like obviously you asking about Elliott wave. Now I'm not an expert with Elliott wave by any means, but let's see. I feel like the move begun kind of, you know, in this area, probably here, like you could call that the bottom. Then this is wave 1. Now this is an ABC correction, so a wave 2 pullback. And then this seems to be our wave 3. Either the wave 3 is still being like drawn out, or this is an Elliott wave, because look, our wave, we've already dipped below the high. So this would invalidate this as an Elliott wave count at the moment. However, the thing that would bring this, like, sort of this potential wave 3 is if this pullback, you know, starts to find support soon and do this, and then we could say that it's all part of like a bigger wave, like, you know, it's a wave 3 structure. But yeah, look, this is how vague like it can be with Elliott wave theory. Like you just don't know, like, if it's been invalidated yet, because you know, is this the pullback? Maybe we should go on a smaller time frame to see the counts. Let's go to the 5 minute, because Elliott wave, technically, like according to Elliott wave theory, you should be able to find waves on every time frame, like a 5-wave structure. But yeah, look, I find a lot of examples where I just can't find it. I just can't find the 5-wave structure. But look, I think it does look like it's hit some pretty critical resistance, and it's retracing to look for that support. Now, cryptos, altcoins answer to Bitcoin still. If Bitcoin goes up here, then ABT has a chance to continue its rally, you know? However, if Bitcoin retraces, which it very well could, we could lose this 23K support that we currently have, and we really could come down to test not only the short-term support that I have here, but we could start to, like, you know, really come down and correct this entire move, like, properly, because we sort of haven't done that yet. It's just been a staircase up with no real relief or retracement off the move for the bears. Like, so yeah, the bulls, you know, there's no question the bulls are in control at the moment, until we see, you know, a break of market structure. Let me turn off the events here. Until we see a break of market structure, I'm pretty sure the bulls are still in control. So, see, I've got the smart money concepts indicator on. You can see, yeah, there hasn't even been a change of character yet to the downside on the 4-hour chart. Now, on the 1 hour, there's going to be a lot of noise. There's going to be a lot of activity because, like, things are happening all the time. But look, we've had change of characters not followed through with break of structure. So, But we've had plenty of bullish change of characters followed by break of structure to the upside. So that is why the bulls are in control. That is why price has gone up to this level. So until we see evidence of what we need for the bulls to get their retracement, or for us to retrace from this level, is we need one of these change of characters followed by a red or bearish break of structure. So we're nowhere near that yet. We're not there yet. That's how I see it. But I would be on board with a heavy retracement, maybe back to 20k, maybe lower. If you look at the oscillators, they are cooked. That doesn't mean that we can't go higher. It just means be careful. Like, be aware that the oscillators are very hot right now. On the hour chart, they've gone back to a neutral kind of spot. But if we look at the daily, I think it's the daily. Yeah, the daily RSI. Let me make this more visible. The daily RSI is extremely elevated. But you know what? It can stay elevated. There's no law that says it has to come down. Like any time. It can stay elevated as long as it needs to, right? Don't know why that line's brighter, but anyway. Let's see if I can make that my default. Save as default. Okay. Now, on a daily perspective, the stochastic RSI has already crossed down, and we do have bearish divergence on the stochastic and the RSI. Look, I'll show you. Let me turn the volume off so we can just focus in on where I'm seeing that. So we've got a high point here, and we've got a climb in price to up all the way up to here. Like, that's our current high up here. So I'm going to put that in red because I'm depicting bearish divergence. Now, on the RSI, we've got a high, but then a lower high. So we've got a series of lower highs. RSI is falling, weakening. So the strength is not reflecting the move on this RSI oscillator. So, and same with the stochastic. We had a cross, stochastic was up here, like somewhere like there, and it crossed down, and then we got another attempt, but we have since crossed back down again here. So the peak, you can see that that's another decline. Like, from this range to down here, that is another sign of bearish divergence. So bearish divergence, there's no doubt about it. Do we have to price correct heavy? No, we don't. We don't necessarily to basically get this bearish divergence figured out, or like to get it resolved. We can just chop sideways. That's possible. I'll show you examples of that. Let me go down to a smaller time frame. I'm going to change up my indicators here. All right. So here's a good example. Look at all this bearish divergence as we were climbing. Now, did that cause a huge correction and retracement back down to 16,000? No, it didn't. We did like a time correction. So I'll show you. It caused consolidation, the bearish divergence here. If anything, that's the most it did to the price, is we went sideways. So that is quite possible. When you see bearish divergence, it doesn't necessarily mean the thing's going to crash or pull back. We had a whole bunch of, look at that bearish divergence, look how elevated we were on RSI in this push here. But the result was just us cooling and chopping sideways. And we are still sideways. We have not made any significant move down yet. there's no doubt the momentum has slowed from this, this rallying. But look, in my opinion, this trend may not be over yet. We may get another push. We'll just have to wait and see what happens. As far as a catalyst for the push, I think with the funds rate coming up, if we get that, if we get 4.75% total interest rate rather than 5, we're after the 25-point hike, not the 50. So if we get the 25, that's kind of been priced in, I feel, and it would be positive. It'd be like, maybe now there is a case here that maybe we're rallying into the funds rate, and then when we get the funds rate, it's going to be a sell-off, and that's happened a few times. So be careful of that. It's very risky playing around these big, like, calendar events, these high impact expected events. You want to wait for things to settle into the trend before deciding what position you want to take. Like, that would be my sort of take on it. Now, so yeah, that's what's coming up, guys. We got the funds rate, and then also not too long after that, maybe a couple of weeks after the funds rate, we get another CPI. Now the CPI is the big one, so that's coming out mid-February. So not too much longer to wait until we get that happening. Now we had a bit of a double whammy back here. We had a CPI and funds rate all at once, within close proximity, and that was December last year. Let me go to the daily. Reset. We'll zoom in. Let me get rid of some of these indicators just so we can really focus on the price. Okay, so yeah, we had a double whammy there, back to back, CPI funds rate within 3 days of each other, or within 2, whatever it was, 2 days. This one was a little more spread out. We had the funds rate decision. We actually rallied off the back of that. That was the November reading. If I bring this back. When did we peel off getting 75 hikes? We had it in December. We had a 50 basis point hike. So that was a softening of the increases. However, it did not, by no means did that cause a big, huge rally. It actually dumped after the funds rate. We actually came down off 18K, all the way back down to what was it, 16.2? Basically 16 and a half. So that was a pretty heavy dump. It went down, about $1.5 grand off the price of Bitcoin, off the back of that funds rate. So, and this was a nasty one. That was a 50 hike. This was a 75 hike. So it actually rallied up after it, which is very weird. You can see what I mean by it doesn't really, there's other things at play perhaps that are causing the reactions that we see. Anyway, that's pretty much it. Now, obviously the CPIs, this CPI was positive, it showed a decrease in inflation, so we went up. This one kind of rescued the price because we had the FTX dump, but then CPI came out real positive. So we actually had a really nice bounce after the FTX crash, and that bounced us all the way up to $18,000 after dumping us, down to almost 15.5K, right? We had a very violent bounce, very soon after. I don't pay too much attention to PPI. It doesn't seem to have as high impact as CPI, but it is there. It does do something on the smaller time frames. This was forecast to be optimistic, so I think that's why we sort of rallied into this CPI, but then we sold at Fed funds rate. So that puts us at where we're at. Obviously, the most recent CPI showed interest rate was coming way down, so that's cool. It just added fuel to this already like rip and rally that we had. PPI, crazy wicks happening on there. And then here we are today. Like we're sort of like on the dawning of this rates decision. So we'll see what happens. I think, yeah, you might see further choppy activity before we actually get to the big day, the big funds rate. And then, perhaps all the optimism building up into the funds rate decision gets sold, like a sell the news type event, right? Much the same as back here when we had the funds rate and then it's sold, like it dumped out in December or November. It was like a brief pump. No, wait, that was the FTX crash. I'm talking about this one, sorry. This funds rate. It came out and then it was like a sell the news type event, right? So yeah, we'll get more data. We'll get more data on how it behaves in the kind of climate that we're in. Now, oh, by the way, guys, only a matter of hours ago, we had the GDP figures come out, and this is telling me, where is it? Advanced GDP, see there? 2.9% off a 2.6% prediction, right? Or forecast. We were forecast to have a GDP of 2.6% for December, quarter four. Sorry, I've been saying this wrong the whole time. For GDP, this October result here was for Q3. This was for Q4, the 2.9. This is an advanced GDP reading for Q4. So we don't know the Q4 GDP yet. But our actual for quarter three was 2.6. 1 and 2 were negative GDP. So that was technically a recession by the old terminology. That's the old way of like picking out a recession, what a recession is. That's Q1 and Q2 of last year. December 2021 quarter, so Q4 2021 was a 6.9% GDP. So it was actually really good. Except something slipped, something happened, Q1 and 2 of last year that caused massive drawdown. And you know what it was? Interest rates. The interest rates and the inflation getting out of control. So yeah, there is a rhyme and reason, guys, for these things. Let me go inflation. Where was peak? Where did we peak? June of 2022. Now, June looks at May. So this was actually a figure referring to May's performance. So June referring to May. And now May, January, February, March is Q1. May, June, July is Q2. So it was referring to Q2, which was, this is 0.9%. Yeah, so that's when we were basically at peak inflation. This is 0.9% GDP. And then Q4, look at interest rates inflation heading down, growth going up. So GDP up 2 quarters in a row. So Q3, Q4. So I don't think that's recipe for a recession, guys. I really don't. So I'm, until we start seeing inflation go back up and interest rates go up to try and fight it, and GDP results coming out negative, I think we're looking good. It's looking like the recipe for some kind of recovery to the markets. But and that's kind of like provided there's no black swan events like COVID, right? Provided there's no countries getting nuked by Russia. Provided that these unforeseen events stay out of the game, right? If things just go along status quo, I do see us coming down with inflation, and I see markets making some kind of recovery. I mean, there's already a hint of it. Look at the S&P; it's broken out of this downtrend or it's starting to break out. Look how optimistic today was. We've closed the session already, but this is the Thursday performance. Look at that. It opened up with a huge gap. Albeit the price did come down to fill that gap, but look, we're back on track. We're still back up here. We made a new high before the close. Look at that high that we made. So you can see the gap here. So I'll mark it out. There's the gap that we started the day with. Now price was like, oh, I don't like that gap. I'm going to come down and fill it. So it filled the gap, and then, only then, did it say, cool, we've done our gap, let's go up. Let's head back in the direction that we were like, the trajectory that we've been on, for the last however many days it's been, So all of 2023 has been an uptrend on the S&P 500. You can see that, right? Higher lows, higher highs. So yeah, guys, that ain't recession, that is science. That is a sign of the condition of the market, of the economy, right? Inflation coming down, interest rates softening. We're still hawkish, but it's not as hawkish. It's not as aggressive. There are signs, guys, that we are turning a corner. So until things get bad, that's the facts. That's the data that we have. So yeah. All right, guys, I'm going to wrap it up there. I have to go get ready, but thanks for tuning in. There's only been like a peak of 9 or 10 people today. Interesting. Anyway, that's cool. No dramas. Take care and good luck in your trades. And I'll see you next time, next stream tomorrow. Okay. See ya.